Testing. All right. Microsoft Corporation, msft on the Nasdaq. Technology sector, industry software. Guys, this is the monthly candle chart, man. Look at this crazy base right here. That dip, 2008. Just a blip on the radar. And look at that crazy base, man. Ooh. Exploded out of that. Reached its implied measure move really fast. Arrow. Here's the greediest of targets. Target was reached. What's next? And that target coincided with previously defined resistance right here. Just awesome. But we use stage analysis because all these measured moves, all cool, nice, but once you reach that target, you have to wait for consolidation patterns, and then after that you get smaller targets along the way unless you have a bigger pattern. But if you have no big pattern or nothing's forming or you're not getting any launching patterns, then you're just out. But if you're doing stage analysis, which will apply on the weekly at a Stan Weinstein, but the premise and the technique is pretty much the same no matter what time frame. You would have had an entry here, and this entry for years, you'd be going up and up and up, and you'd still be in it. Through average, that's your trend. As long as you're closing above the 12-month average, you're still in an uptrend. If you close below, that's stage 2. Could start to be a stage 3. You don't want necessarily to short it, but big warning signs that you might need some distribution starting to happen, right? Because if you're starting to have price action below the 12-month average, you're actually starting to create it to flatten out. That means that the price action had gotten close to it, and if you're too far away, you'll get pulled back in eventually. But if you're too close, you're entering this territory here where you could be entering a sideways move, consolidation pattern, stage 3, sometimes continue stage 2, but sometimes stage 3, the next step, stage 4. All right, let's stick. So where is my monthly defined resistance? Right here. Where is my monthly defined support? Look, I had it low all the way here. There's some a little lower right here. And right now, we could be defining some right about here. What? Not that one. What's that? Where do these things come from? Where are my targets? Targets. So if you have a close below this breakdown line, going to give us a target that's going to bring us to previous support. That's going to make a bigger pattern. I don't know what it's going to look like. Let's say we go up here. Doesn't make it. Tuck. Goes down here. And eventually, if ever it breaks down below that 98 level, then your implied measured move is 2. So this is the bearish case, the downward scenario case. We're not there yet. We're going to look on the weekly, see where we're at. And all this, always try to look to see both cases. All this could inverse if we have a close above that 12-month moving average. The target is going to be, drum roll, right here. That's the closest target. And after that, we'll just have continuation here. Price action goes up. 12-month average keeps going up. And after that, it's all cool, guys. All right, let's zoom in weekly. Weekly stage analysis. Oh man, look at that crazy stage 2. Man, Microsoft, if you would have been here back at the beginning, or at least from this last signal, and look at that, man. Not every single time, but most of the time, high candle, twice the average of the previous 4 weeks. Sometimes not quite on these big volume stocks. That's why you always need human view, the context. Okay, if you go just with a mathematical, and it has to be twice the average of the previous 4 weeks, 5 weeks, then you could have probably missed this this breakout line here. It's pretty sweet. You have the close. Wow, okay, I get it. If I control click, there you go, right here. Let me move that. Right here, breakout candle, volume, twice the average. Wait. Wow. And outperforming the SPX, classic triple confirm stage 2 breakout, guys, right there. Above the Ichimoku cloud. Check. And up and up. Do. Sideways move, getting close to 30-week average. Not even testing it. Continuation, up. And here it's slowing down. You're having some wicks getting pushed up by the buyers to close above that 30-week average. But this is creating sideways move, consolidation pattern. Could be the beginning of distribution. Warning signs. You see these volume candles here? Doesn't mean you're necessarily going to go down, especially if you're above that 30-week average. But it's going to mean you're going to need to digest that. And after that, after these 2 down candles, we need 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks, 12 weeks to really start continuing again. And look at that, this red volume, heavy red volume right here for the past 1, 2, 3, 4. So all this is resistant. These are a lot of buyers, that bought, and now after that, price keeps action going down, and unless they're strong hands that have no sell stops and you're going to ride this to the death, then you'll have steps here of every time the price action wants to go up, you'll have resistance, and that's why buyers come up. Then now still a lot of sellers that bought here, bring it down, and the buyers trying to get back in, and that's how you form a top or a consolidation. So right now entering stage 3, very close to, still stage 2, but the next steps are stage 3 and then maybe a continuation breakout, or maybe just a continuation. Well, move out triangles, or maybe just a continuation here. And close above this one, and then continuation breakout here. What I don't like is that it's always a weight of evidence, right? I could look at that. What I see is I'm far in the advance. We know that the market has the world markets, even the SPX coming close in October, have hard time, especially on those red volume candles. If this be a pullback on light volume, I'd say no worries, it's a healthy pullback. But price action moving back against you on high red volume is a warning sign something is up. Could be maybe not this time. It's like a fridge doesn't fall over the first time. You have to shake it a few times left to right before it falls down. And that's the purpose of volatility of stage 3s, is the market's really trying to decide, are we going to continue, or it's time for a contraction and a stage 4 breakdown, guys. So these are the warning signs. We're not broken down yet. Tried a few times here, but you got to keep an eye close on this for these the monthly levels we identified, even the weekly defined level right here at the 106. Any close below the 30-week moving average. These are all warning signs, guys. I even have a Stan Weinstein trend line 1, 2, 3, or 4 or 1, 2, 3 checks. Next time it breaks, you should be taking half your position out. You're going to be entering a stage 3 or a slowdown, and you just don't want to stay in the stock to pray it goes up. You want to make sure it's really moving in your favor, guys. So very embryonic, still stage 2. I think it's slowing down because of these red candles volume. So if any of the other exit signals pop up and they tell you to exit, hopefully you won't have your emotions in and you'll say, I have my signals. I'm starting to have lower lows. My downtrend is starting to wind down. I should move my risk to a stock that's just exploding right here, to a more explosive stock that's going to give you better returns for the time I'm involved in it. All right, guys, that's it for Microsoft. Thanks for watching. Ciao, guys.